What is going on, investors? Hopefully, guys are doing well out there. That is right. It is Friday. And that means it's time to kick your feet back because here on the Investor Channel, every Friday we recap all the major news of the week and the technicals from the major FAANG stocks, including Microsoft, including Tesla, and including Netflix. Again, just too interesting from a technical perspective. We'll talk about that and more on today's show. I think we got a ton of great news, but also obviously the technicals kind of reversed this last week. And so we've got to talk about it all on today's show. Let's start things off with Facebook. Start of the week at $213 per share. End of the week at about $222 per share, right into an area of resistance. We'll see if it can poke its head through that or get rejected heading into next week. We'll talk about more of that here in a second. Now, Apple, Facebook, Google, many of the tech titans are facing a landmark European Union regulation, and this appears to have been passed, but it's got to go through a little more of a process. I'm not as familiar with European law and how that all gets pushed through the system, but it appears this law that if it's passed here relatively soon could go into effect by the end of next year, or end of this year, and maybe in the beginning of next year. Very interesting piece of legislation, and in fact, it encompasses a lot of the complaints that people have had around big tech like Facebook, Google, and Apple. Now, let's talk about some of the things that are inside this bill. It will ensure that users have the right to unsubscribe from a core platform under similar conditions that it subscribes, so likely really easy. For the most part, it's not going to allow important software such as web browsers to be a default upon installation of an operating system. So think like Chrome, think like Apple Safari as well. Ensures the interoperability of instant messaging services and its basic functionalities. So think about WhatsApp, think about iMessage on your iPhone, think about Google's messaging system, think about Facebook Messenger and all the other messaging services out there for them to maybe potentially have to work all together. Would be kind of interesting. Would allow app developers fair access to supplementary functionalities on the phone, such as NFC chips for maybe like payments or sharing information. Would give sellers access to their marketing or advertising performance data, and they would force the companies to inform the European Commission on their acquisitions and mergers, something they probably do for the most part anyways. It would also encompass some other things that maybe even are more important than that. They would not be allowed, and this is Facebook, Google, and Microsoft and all these companies, they would not be allowed to rank their own products or services higher than those of others. And this would be really interesting from a search function perspective, an app store perspective as well. We'll see how these companies are able to balance that if this happens to go into law. They can't reuse private data. They have to establish fair conditions for business users and not create kind of unfair situations there. They can't pre-install certain software applications, and they must require app developers certain services, including extra payment systems, which would certainly take a shot at the app store. Now, I wouldn't necessarily say this is a quote death blow for any or all of these companies, but it certainly will be a major headwind, especially how these things are enacted and how seriously they are enforced. Certainly would create conditions where these companies might not be as wildly profitable in the European country. I think the real thing to think about is how will this translate over into American law, because sometimes we see these laws passed somewhere else and then lawmakers here in the United States get the bright idea that something like this would be great here in the United States. Certainly a law like this passed here in the United States would have probably a deeper impact on these companies' earnings. Definitely something to monitor over the coming weeks ahead. Meta plans an $800 million data center for Kansas City, and it adds Instagram feed options. Essentially this data center, which are going to receive some tax perks up to about $8.2 million. Going to be 1 million square feet and, excellent for the Kansas City economy, quite frankly. Now, the other thing that they announced here is you're going to be able to go to kind of a sequential feed on your Instagram like it used to be, on Twitter like it used to be, really across the board, until they started to introduce kind of algorithm or feeding your feed what they think that you want to see. Now you're just going to be able to see it in sequential order again on Instagram. We'll see how popular that ends up being. Moving on to Apple, start of the week at about $165 per share. We thought last week this one could break to the upside, and it certainly did. We're all the way up to about $174, actually right smack dab back in an area of resistance again with Apple. We'll talk about that from a technical perspective here in a moment. Apple is giving a second round of stimulus checks. No, actually, these are bonuses worth $200,000, between $100,000 and $200,000. If you remember, a few weeks ago, we reported that Apple did the same thing with a different group of developers, essentially, so these people don't jump ship and go work for a Facebook or go work for Google, or in some cases, maybe even start their own companies. They're awarding these stock bonuses that vest over a period of time worth between $100,000 and $200,000. Kind of a sign of inflation, but also a sign of the the really competitive environment there is out here in San Francisco for these types of developers. And I actually like what Apple is doing here. Instead of going out and trying to find new developers, which would certainly take a lot of money and effort and also some time to train those people up and maybe get them to work out in your company, just retain the people that you already have. Give them the stock. Your stock is such a great performer that it's not really that big of a deal when it comes to what Apple is doing. Now, Apple to be hit with their 10th fine by a Dutch regulator over dating apps, and this has to do with the fact that they're not allowing a second payment provider on these dating apps. So what they want you to do in accordance with Dutch law is have two separate payment options when it comes to a dating app, and Apple is not doing that, and they are fined by about $5.5 million, and a ninth fine is already here, and a 10th one is coming, apparently. Apple is working on a subscription plan for its iPhone and other hardware. This is kind of interesting because I think most people already, or I wouldn't say most people, but there's a large percentage of people that when they buy an iPhone, they're either getting a carrier subsidy, like they buy an iPhone and then they pay for it over 12 to 24 months through an AT&T or Verizon, or you have access to the Apple credit card, which allows you no interest payments, I think over maybe 12 to 24 months of any Apple purchase as well. So a lot of people are already financing their Apple purchases. What Apple wants to do is maybe move into a subscription model where they sell you the phone every year, but based on kind of a certain subscription plan. And maybe what they can do is roll up in all of your fees and all your subscriptions to Apple Music and maybe iCloud and any other subscriptions that you can, all into one bundled price. And on top of that, you're going to bundle in hardware now. So every year, maybe you get a new iPhone, or maybe every other year, they could potentially roll this out to things like the Macintosh computers and other devices that the company makes. Could be a very, very interesting development. Now, Apple iPad Pros are being tested by American Airlines for check-ins. This was kind of a small story. I bet most people kind of brushed over this like it's not that big of a deal, because as you dissect this, it's really just like one terminal in San Jose. It's not really like this big nationwide test. But what this is kind of and we're going to talk macro here for just 2 seconds, is this is kind of a broader thing. When you look at a macro environment where you have so much inflation, okay, one way to combat inflation is really to get more efficient as a business. And so one way Alaska Airlines is trying to do that is improve the check-in process and get you flowing in and out of an airport, in and out of their airplanes faster. That can be much more efficient for a company like Alaska Airlines. And we tend to see these types of things in an inflationary environment. How I'm going to wrap that back into Apple is obviously their products, these Apple iPad Pros, are being used in a way to combat inflation, have these companies get more efficient. Could be an interesting story, a broader story going forward with Apple. If more companies have to adopt newer technologies, well, obviously there's not too many companies on the cutting edge like Apple with all of their different products. Certainly could get them more business down the line. Now, Apple supplier of Foxconn back to normal, quote unquote, operations following a COVID shutdown. So obviously we talked about last week, it was completely shut down, and then a day or two later, they were back to kind of a limited basis, and now it looks like they're back in full swing. So they've obviously gotten things under control really quickly at the Foxconn headquarters. Now, moving on to Amazon, start of the week at $3,228 per share, just melting up nicely, actually sitting on an area of support and just kind of hanging out there with Amazon. Ended the week at about $3,295 per share. Now, Amazon's Prime Video is launching a new Bond-themed competition show. It is going to be called 007's Road to a Million, with a prize of over $1.3 million. This is going to be on the UK side of Amazon Prime. This is just, I didn't do this to really promote the show. I don't really care. It might be kind of an interesting show, honestly, but it looks like it's not going to be here. You probably can watch it here in America, but it's going to be marketed more to kind of a UK audience on the Prime platform. platform. But here's the kind of the tie-in when we talked about how Amazon closed on this MGM Studios. Well, part of that business was actually James Bond. So now they're going to have this property of James Bond, which obviously comes out with movies every couple years, I guess. I don't know. I don't watch a lot of movies, but that's just one segment. Okay, you got James Bond video games, but you also have these like spin-off ideas, which I actually think are the most exciting for Amazon, because the movies are expensive to produce. Sure, they're going to make money, but these kind of side projects can really be a bread and butter business for a company like Amazon. And I'm personally excited to see how that works out in the coming years ahead. And moving on to NVIDIA, started the week at $265 per share. Really nice performance again. I mean, this stock has been just ripping over the last 2 weeks, up to $276 per share. NVIDIA said the ARM, which was ARM Holdings owned currently by SoftBank. We'll have more information about ARM Holdings here in a second, but NVIDIA referred to ARM as a one-of-a-kind asset, which was really kind of a glowing endorsement of ARM and the technology that they have. They also talked about how, and this is NVIDIA, they're interested in using Intel's Foundry, but we're obviously years away from that actually being really something that they have broken ground on here in the United States and have it up to capacity to service customers like NVIDIA. But Goldman Sachs is reportedly on track to lead ARM Holdings IPO. So as you know, NVIDIA's deal to buy ARM was for $40 billion. So we'll see after, over a year has really gone by on this deal, but also the kind of the glowing endorsements by NVIDIA over ARM Holdings. We'll see what it IPOs at. It also gives us kind of another, if you want to build kind of a semiconductor portfolio where you might have a little bit of NVIDIA, maybe you got AMD in there, you got TSMC, you've got Intel. Well, now you might be able to bolt on NVIDIA as well. You got QCOM. I mean, there's just a ton of stocks in this space that you could build a nice little portfolio. You could go out and get one of the ETFs. But look, I mean, I tell you what, depending on the valuation of this ARM's Holdings, we'll certainly take a look at the financials and stuff like that. But I tell you what, it's definitely a stock that we're going to have on our radar. Now, if it gets overhyped during the IPO process and it becomes overvalued, we'll certainly, talk about that here on the show. But it's something where if it flies under the radar a little bit and it's maybe not right at the IPO price, but we see that kind of slide off, could be a stock that we're interested in buying here in the short term, because I believe what NVIDIA's CEO has to say, there was a reason why they wanted to buy that company. And even after paying a breakup fee and not being allowed to buy that company, he still holds it in very high regard because their technology, quite frankly, is being used by a wide range of customers, including Apple and many others. Moving on to Netflix, started the week at $379, got rejected at that level of resistance that we talked about. That's actually exciting for me, okay, because I don't own this stock currently. I actually think that's kind of exciting. The stock ended the week at about $373 and some change. We'll talk about it from a technical perspective here in the minute, but I also want to add another reason why we're talking about Netflix a little bit more is I like some of the things that they're getting into, okay? We'll talk about how they're, maybe generating some revenue from some password shares here in a moment, but Netflix announced 3 more mobile games, including their first FPS is what we'll say. How successful these video games are in the shorter term, likely a little bit irrelevant in the longer term, because Netflix could probably garner a little bit of attention and certainly some revenue in the video game space the more and more they invest into this area. Now, Netflix keeps up their games momentum by acquisition of Boss Fight. So they're doing the video game playbook by kind of acquiring video game design studios and companies that have expertise in making games and have a portfolio of games. They're bringing them in-house and giving Netflix a wider access to not only current games that can be used now, but also future games in the future from these development studios. Now, Netflix password sharing approach could bring 4% more revenue upside. This is according to Cowen. This is based on their 2023 revenue estimates. They are estimating over $1.6 billion worth of global revenue could be put on the books of this company just by adding this feature where they're forcing you to pay an extra couple of dollars if you are currently sharing your password with amongst your family and friends. On a company that's doing $166 billion in market cap, I tell you what, $1 billion is a significant thing to a company like this. And the valuation of Netflix, when we look at this stock price, this thing was up over nearly $700 per share, and now it's all the way basically cut in half down to about $370 per share. You can see I'm kind of pumping my own book here. I know I don't currently own this stock, but it's one I'm very, very interested in at these prices, these valuations, and also the development of new products and services gets me kind of excited about Netflix, where I wasn't as excited before. Moving on to Google, start of the week at 2,730. One hello uptrend. This one is just moving back to the top end of the range, which is close to $3,000. It's currently sitting at about $2,833 per share. Google is going to allow an alternative app payment starting with Spotify. You think they're doing this because of regulation? A little bit of regulation, a little bit of competition. I think Google knows what's coming. I think Apple does as well. They're just likely going to force the regulators to really force their hand, whereas Google's in a little bit different spot. They're probably going to get out in front of this because Google's kind of seen this story before. When regulators get on their back and they seem convinced to do things like eliminating the quote app tax that Google and Apple have on their ecosystems, well, Google's going to get out in front of it a little bit. Now, they're just doing a small test with one app maker in terms of Spotify, but likely this is just kind of a test because Spotify has so many customers, so many use cases. It's going to allow Google to kind of get all the bugs out and then likely roll this out throughout their entire app store because they see the writing on the wall. But Apple likely does as well, but they're gonna be forced into it. They're not gonna voluntarily kind of move this direction, I don't think. I think they're gonna make regulators, or in some cases maybe the courts, to force them into that. Now, Waymo to launch fully driverless robo-taxi service in San Francisco. This is to accompany this same service that they have been running in Phoenix, Arizona as well. I think this is obviously bullish for Google to a certain degree, but this is incredibly bullish for someone like Tesla, okay, which obviously has their own robo-taxi dreams and aspirations. The fact that Waymo is kind of paving the way out here in San Francisco, well, I think Tesla, while they maybe don't necessarily have to be first to this party, certainly has the scale and the ability to move into this business model as well, and certainly could be bullish, again, for both companies, but I think particularly for Tesla as well. Moving on to Microsoft, started the week at $299, ended up basically flat, up to about $303 per share. Microsoft's internal source code, that can't be good, was reportedly leaked by hackers. It was put up, it was nearly 37 gigabytes of data. It was put up, it was taken down, it was put back up. I mean, these kind of things happen all the time. I don't necessarily think this is a big deal. I mean, it's kind of a big deal for Microsoft, but it's less of a deal once you have the scale that these companies have. If this happened 20 years ago, would have probably been a bigger story, probably had a much bigger impact on the stock. But where we are at today with technology, you can have somebody's source code, but if you don't have all the marketing and the users and the rebilling that these companies have, well, you really don't have that much, okay? Whereas in the past, it was a little bit different. It was really the quality of your software mattered. Now, I think really the quality or the quantity of your user base is really what matters, and that's what you can't really steal from Microsoft with just their source code. Now, the FTC, this is not good, deepened their probe into the Microsoft Activision deal with a second request. We'd expect this. This is a large deal. It's a large company. Lena Khan, who is heading up the Federal Trade Commission, is, kind of built her reputation on going after large companies, and it doesn't really get much larger than a Microsoft combining with another company, which was really large in the video game space, and that's Activision Blizzard. We'll see how this one turns out. There's a large breakup fee associated with this one, which again wouldn't be that big of a deal for Microsoft since they have so much cash, but it would be kind of bullish for Activision to just get a couple $2 billion spit onto your balance sheet just for the breakup of an acquisition. We'll see what happens there. Moving on to Tesla, start of the week at $937 and just jolted higher up to about $1,010 per share. Hertz added Tesla Model Ys to their rental fleet. This goes along with the Model 3s that they already had there. Tesla supplier LG is to build a $1.4 billion factory in Arizona. This is very bullish for the region of Arizona. They're seeing foundries built there by TSMC, and I think Intel has an investment going on there as well, maybe even Samsung. And now we're seeing LG move to the region with a large battery manufacturer. And Arizona is actually in a really good spot geography-wise because they can, it's not that far from California, where if these batteries need to come over into California, they potentially could, but also down into kind of down and over into Texas. It's not that far away either. So it's a good, geography for them. And my guess is this battery facility probably would also maybe supply other car makers, and even it says here GM, Hyundai, and a couple others. So it can kind of move its way up to Michigan or where they happen to fabricate those cars. Interesting development there. Li Auto follows XPeng and Tesla in announcing a price hike. Most of these car makers are announcing between $1,000 and $2,000 to $3,000, even upwards of $3,000 per model. This is in reaction to the fact that raw material prices have absolutely skyrocketed over the last few weeks and months due to supply chain challenges, but what it also reflects is a little bit of demand as well. Whenever you have rising demand, one way to tamp it down a little bit, some of these companies, including Tesla, are kind of on a back order system when it comes, try to go reserve a Tesla and go look how long it takes, okay? Some of the ways to kind of tamp down demand, as we know, just basic economics 101, is raise the price, and that'll tap down demand a little bit, but Chinese EV maker NIO won't increase its vehicle prices in the near future, so it appears that maybe they're willing to take that margin hit in the shorter term, and we'll see if it allows NIO to kind of capture some market share, or if EV makers or EV buyers, are a little less price sensitive. We'll see what happens in the coming weeks and months ahead. Tesla's CEO Elon Musk cannot stop SEC scrutiny over his tweets. That's according to a regulator. Elon Musk has argued that his tweets are a form of free expression, otherwise known as free speech, protected by the First Amendment. We'll see where this goes. My guess is that Elon Musk has enough money and probably the wherewithal to take that to court if he wants to. Tesla to officially integrate its Gigafactory in Berlin with rollout of Model Ys. This was accompanied by a video of Elon Musk dancing as the first one rolled off the assembly line. Incredibly bullish. Okay, look, some of this is priced into the stock already. Don't be foolish and think, oh, the Giga Berlin's online, they're going to tack on 500,000 vehicles in a year in capacity, which is a huge increase over where the company was just a year ago. But in a lot of ways, Giga Berlin has been priced into the stock to a certain degree. But don't get me wrong, this is a major development, and we will likely see Giga Texas rolling off the assembly line and cars rolling off the assembly line here very shortly for Tesla. Moving on to the technical segment of the show, we'll start with Facebook. Like we talked about last week, I'm going to zoom in because the price action down here is where we're at, quite frankly, with Facebook. The stuff up above, we won't really address that until we get up above $245 per share. But we identified an area right here at about 220. On the way down, we were saying that's where we get stopped out at. That's where we got stopped out. I got stopped out at 220. I bought back in somewhere here at the low 200s. Maybe it was 205, 206. Can't really remember. So I'm in this one again. There's an area right here at 219. Look, where these lines are, plus or minus 3 or 4% on the stock. So it could be, I really consider where Facebook right now at an area of kind of resistance or support. So look, you don't tune into YouTube for guys to tell you, oh, the stock's going to go one way or another. So I would tell you, I think the higher probability is we make a pullback with Facebook. That would actually get me the most excited with this. If we get a pullback back down here to the 200-ish region, we should see support down in the right around $200 per share with Facebook. If we can do a pullback to there and then a bounce, oh my gosh, that is like textbook. This is textbook kind of bottoming, uptrend forming with the stock. Now, if markets just go ballistic next week and we put some green candles up above 220, well, oh my gosh, we have a high probability, I think, of getting back into the 240s. Maybe not all the way back up to 245, but maybe approaching those 240s. So even if you've missed this kind of leg of growth, watch this one next week. You get a break above, I would say probably 225. I think you got $10 to $15 in upside in this one, maybe next week, quite frankly. Only to what I think at some point, if you make that big of a move on Facebook, where in 1 month you go from 200 back up to 240, well, I think you've got to have some kind of pullback, right? I mean, well, look, it happens at some point. We'll have some kind of pullback. If we get above 240, I think you'll come back here and retest at least 220. I think higher probability, though, I think this rally is just probably a little overextended. I see volume not really increasing that much. I think we could see buyers kind of disintegrate a little bit, and this stock could walk back to areas where I think you could conceivably buy it. Now, complicating the situation just a little bit. It's not a big complication, but just keep in mind this company has earnings next month. I have it right here, April 27th. So we're still a month away, but boy, those earnings over at Facebook are going to be really scrutinized, and it could be that this stock just continues to walk up into earnings. That is possible as well. So we're really monitoring this one really closely. This is why I just kind of stepped in here and bought it. I said, hey, on a 2 green candles over the trend line, you buy it. It just may, I'm not the smartest guy in the world, so I like kind of no-brainer type things. And a second candle over and up, a downtrend, and I bought this one. Now, like, the thinking begins. Can we get a pullback? If we get a pullback back to 2, do I buy it again? Probably. If we get a break above here, do we get resistance up at the 240, 245 range? Tell you what, we're monitoring Facebook not only from kind of a fundamental perspective, but also a technical perspective as well. This one's just really done some interesting things. Next week, quite frankly, very, very interesting when it comes to Facebook. Moving on to Apple. Hello, green candles. 1, 2, 3, 4, 5, 6, 7, 8 of them in a row. Oh my gosh, look at this. I mean, we're up on a rocket ship with this one. At some point, you'd expect that rocket ship to give out a little bit of its gas. We have pulled up into an area. I have it marked out here at 176. Psychologically, it could be a little bit lower. I could see conceivably, yeah, it's down here, probably closer to 175. So this one rocketed through an area of support that we had identified, and these are really, really thin areas of support. I should probably thin these lines out. That's kind of what I try to do here on the channel. When it's really firm areas of support or resistance, I try to put big red lines or big thick green lines. When it's thin like this, I mean, this is not that big of an area. I could easily see Apple next week just charge right up through this, and then we hit our head on 182, depending on what happens. I mean, 182 is a critical level with Apple, because if you watch this show for any length of time, you get above 182 on some momentum, and hello 200, hello 220, hello 230, hello 240 on this stock, because sellers would just completely evaporate over that level. More realistically, I think, as we hit our head somewhere in this range, it could go all the way back up to the 180s next week, could hit your head there. If we start the week out bearish on Monday, I could see a pullback back to this other thin area of support down here at the 165-ish range. You get a pullback there, that can be a buy. I tell you what, you could have a pretty deep pullback on this one, all the way down to like the low 160s, and it's still technically looking okay. Not great. It's still looking pretty good with Apple. I had seen no reason to sell out of a position. I've been holding Apple this entire time. Moving on to Amazon. Speaking of stocks that I've been holding, you can imagine my stock performance over the last few weeks have been absolutely fantastic thanks to Amazon. We've gone from about $2,700 all the way up to about $3,300 on this one. We'll zoom in because, I mean, it's pretty cut and dry with Amazon. We've got a pretty firm area of resistance up here at about $3,500. There's an area of support here. We might thicken this a little bit at right where the stock is right now, about $3,300. There's an area of support there. I would say it's kind of a transition area with Amazon, because you get below 3,300 and you've got a pretty high probability of coming south of 2,800. If you can keep pushing higher on this one, obviously the first stop is back up here at 35. You break above 35. This is what we've been waiting for like 2 years. Over 35, then you retest 38, and just like what I described with Apple, and I'm talking about an extreme bull case, and I mean, we can kind of do that right now. After you print like 7 or 8 green candles in a row, you can just, I don't think you can assume it'll keep happening, but you can maybe like think about it and dream about it. Well, we could get back up above 3,800 on this one, and the sky's the limit. Look, this company has a $1.6 trillion market cap, and I think there's a lot of people that could argue just one segment of their business, not the entire business, but just one segment, either Amazon Amazon.com or the AWS segment is a $1 trillion business just on its own. And obviously you have the combined property over at Amazon. I'm talking up my book a little bit with Amazon. I think more realistically is the stock market's got to take a breath. I mean, this is just a monster run that this stock and really the rally that we've seen over at Wall Street. I think you take a breath, you come back, you pull back into an intermediate range, can be a buying opportunity, in my opinion, with Amazon. And Amazon's in a little bit different situation than most of these stocks because it's flagged sideways for like basically a year now between about 20, we've expanded the range, but it's basically between 2,700 and up to about 3,500. The stocks for the vast majority of time has really traded in that range. And even more specifically, the stock's been between 3,000 and 3,500. I mean, it's literally been in a $500 range for the vast majority of a year outside of a few days or maybe even a month. So that makes Amazon a little bit different, especially when you look at Facebook, which is broken down, Apple, which is still very close to the highs, Tesla included, Google. Those stocks are in a little bit different spot. Amazon has been in consolidation mode, so it wouldn't surprise me if this one continues to the upside. Maybe a little more wishful thinking than anything there. Moving on to NVIDIA, just continued this uptrend. We talked about 2-candle break above the uptrend. Look, I can't decide when and how these things happen, but I've told you for weeks during this downtrend, we were waiting for 2 green candles. Oh, I mean, that's like the textbook. If you waited for 1 candle or you waited for just the peak, that's okay. If you bought at any of these lows, there was areas of support down here. That's okay. I'm just telling you the textbook thing, 2-candle break above the downward trend. We made that back on March 17th. That was what, 8 days ago? We were at 240 some odd dollars per share. That is where I stepped in, and now we're up here at 276. We are essentially at an area that kind of makes sense from kind of a take a breath, kind of pause resistance level. You break above it, I think you could probably potentially retest these highs up into the $300 range. You get rejected here. We put up a red candle instead of green candles next week. Any rejection back into the 230s, I think personally, can probably be bought. Even lower than that, although you wouldn't really want to see it from a technical perspective, lower than 230 can certainly be a buying opportunity as well. I'm still not convinced that this rally is just the end of the downtrend. And so there's some caution there. When I say you come in here and buy the dip, I wouldn't, max out on your margin on your Robinhood account, or I wouldn't max out your IRA spend for the whole year. But yeah, a portion of your 4 or 5% of your cash or whatever you want to allocate into a stock like NVIDIA, well, I think you could potentially do that. Again, the trend was very, very clear for many, many months, and then it reversed. And so you have to reverse your thinking when those types of things happen. Moving on to Netflix, really did what I wanted it to do. Selfishly, okay, I don't own this stock, and it's now sitting here at about $373 per share. We do have earnings on April 18th, which is just a couple of weeks away. So we're actually this is usually the first of the FAANG stocks that reports. And so we'll see, heading into earnings where this one goes. It did a big old dump last earnings, as you recall. We went from over $500 per share all the way down to closer to, I think, $350 after kind of the dust settled on this one. But it got rejected in an area of kind of a resistance, kind of support. This area will turn to red so you can see it. This bar right here at about $380 per share, that was resistance for many years over at Netflix. And so now it's acting as that again in the short, very, very shorter term. The stock is still making higher, like lower sets of highs. So we have highs here, lower set of highs, and just a little bit lower sets of highs. So I would expect this one to continue to pull back. I wouldn't really be concerned as long as it doesn't get below kind of an area that we have marked out down here a little bit lower. I'm going to move myself out of the way down here at about $329 per share. Essentially kind of the 52-week low. When we're talking about Netflix, there's a 52-week low down here in the 330s. I wouldn't want to, obviously you wouldn't want to see it get down below that, but that would basically just mean that this downtrend is still intact and this uptrend that we've made really didn't break us out of it. It just really created another lower sets of highs here. I'll kind of zoom in on this so you kind of see what I'm thinking here. And so I'm thinking if we roll, this kind of looks like the stock, at least in the shorter term, kind of ran out of buyers here for a second. Look, I think there's a probability that we pull back on this one. If you're like me and you don't own any shares of this, and let's say you want 10 shares of Netflix, so about $3,700, $500 worth of Netflix. And look, if you want 100 shares or 200 shares, the math all applies for you. But as this one starts to pull back, I could conceivably see I could maybe want 10 shares of Netflix at some point. A pullback next week, and I could see executing a 10 to 20% kind of purchase on a stock like this. So if you wanted 10 shares, 1 to 2 shares. If you want 100 shares, 10 to 20 shares on some kind of pullback. Again, with the idea that we think there's some support here at 330, but we could be wrong. We could just break right through 330. There's earnings over here. We could do another gap down on that and look out below. We would definitely not want a full allocation into Netflix if that happens. Now, the reverse case is we pull back, but we find some support and then we eventually break out above this 375. You break above 375 on Netflix. This is what has me excited about this stock from a technical perspective. You get above 375. The next stop, quite frankly, is back up here at about 415. And it's not a real firm area. You slice through that and you can get, there's a big gap here. I mean, it's back up into the 450s, 500s with the stock. And where the market cap is today at about $165 billion. I just did a video on NEO, which is worth like $34 billion. So as you can imagine, is worth, like a third of a Netflix, which has far more cash flows and profits than a stock like NEO and quite frankly, far less competitors and challenges. I really like a stock like this going forward. I waited a long time. There's a lot of people here on the channel. Why don't you own Netflix? Why don't you cover it much? We really started covering this stock a lot above 400. It just didn't make a lot of sense. But now that we're down here, they've pulled forward earnings, pulled forward that multiple. They've pivoted into other areas like video games, other financing charges, maybe potentially online advertising or streaming advertising on their platforms, an ad-supported model. Gets me really excited, quite frankly, about that company. Moving on to Google. Oh my gosh, another uptrend here. This thing bottomed out down here at 25 and it's working its way up to, it really broke through kind of an intermediate area here at about 27.50 and we just sliced right through there through butter. So I'd have to imagine we're walking right up here at about 3,000. So I look at the Apple chart and I'm looking at the Google chart. And I think there's still potentially more legs to this rally, okay? Because these stocks are a huge part of the market and they both really don't have a lot of overhead resistance until they get all the way back up to all-time highs. You get all the way back up to all-time highs on this one, and certainly you're expecting, because that's what's happened really over the last 6 months or so, you'd expect a pullback at that area. You've got areas of pullback at 27.50 and then again back all the way down at 25. Google is range bound just like Amazon until it does one thing, or actually two things. On the bull case, you need to get well above 3,000. You get above 3,000, I tell you what, 33, 34, 3,500 absolutely in play. You get below 2,500 and then your entire portfolio will be getting absolutely decimated and you're going to have a big downdraft in the markets, because if Google breaks this area of support, well, likely Amazon and the vast majority of these other stocks will break kind of the lower end of their support. Moving on to Microsoft, also, put it 2 candles up above this kind of purple trend line that we have identified it here. It did break above the previous sets of highs, also gently. The previous sets of highs with Microsoft kind of peaked out right at about $300 per share. You're seeing that we kind of peaked our head above it. So it's not like a convincing break, but we do have some overhead support right where the stock is right here. So those are the previous highs that we made back in August. Stock broke down, but then it broke above, went all the way up to 345, crashed all the way down to 268. Now we're back right at the highs again that we made back in kind of August, September of last year. It would make sense for Microsoft to take a breath at this area and pull back. If you don't pull back below the previous sets of lows, which are right here at about $280 per share, you pull back like north of that and then make another move higher. Incredibly bullish sign, incredibly bullish bottoming sign, at least in the shorter term. Speaking of bullish, look at this move that Tesla has made. And you'd expect Tesla to make kind of outside moves, okay? When an Apple has a rip higher, when Microsoft, when Google, when these stocks are ripping higher, even Amazon, you'd expect Tesla to make a similar type move. And we can take this upper trend line off because that is obsolete at the current time. This thing absolutely, convincingly took out the previous lows. So you make a high set of lows up here, lower set of highs here, lower kind of grouping of highs here, lower grouping of highs here. What do we say here on the channel? You wait for that break above. And again, this is textbook, okay? For you guys playing with, $10 in your Robin account, you could probably experiment a little bit more and see how these things go. But when you break that trend, okay, it's like starting your car every morning, okay? Subconsciously, you know what that sounds like, you know what it feels like, and every morning, 9 times out of 10, 99 times out of 100, it goes right. But maybe there's that one morning where you hear a weird sound, or really, the deafening sound is when your car doesn't do anything and it doesn't start. Then you're like, oh my God, something's different. That is what happens when you break trends on stocks, okay? When stocks are in this downtrend, this is like starting your car every morning and you just being able to back it out and drive and no big deal, okay? Now all of a sudden you heard a weird screech when these two candles start to break above here. When you break above the previous highs, which are about $900 per share, that's your car's not starting, weird stuff is happening, and that now you're on a breakout alert, obviously in a positive sense if you are long this stock. There tends to be a little bit more short interest in Tesla. That's why I think we see a little bit larger swings with this one. We'd expect some kind of pullback. I think healthy pullback back here to 900. That could signal a buying opportunity because we have this upper trend line intact. I tell you what, you could pull back all the way back down south of $850. Again, it depends on how fast that move happens, but even if you put up a bunch of red candles, this is why this rally we've made over the last 2 weeks in the stock market is so significant from a technical perspective. The fact that now you have to have an equally pretty steep downtrend to really change now this momentum and this pattern that the stock has made just over a short period of time. Again, these downtrends tend to go a lot faster than these uptrends. That's why, even though this uptrend is steep, some of you might be sitting on the sidelines, some of you might have played this a little more cautiously. Don't worry. If this is a new uptrend, look at the last uptrend with Tesla. I mean, it was just gigantic, okay? The last uptrend started in March of 2020 and literally didn't end until November of 2021, okay? This uptrend lasted a long time. Yes, there are big swings with Tesla. Might not be the best example because this stock is much more volatile, but you could pull up a chart of Microsoft and Google and NVIDIA and Apple and any of these stocks. The uptrends last for a really, really long time. So even if you didn't get back in on any of these days, don't worry. Some red candles are going to show up. And when those red candles show up, you have a very, very clear playbook with Tesla. It's a pullback to 900. That can easily be a buying opportunity. And with Tesla, plus or minus 5, maybe even as much as 10% on this stock because it's so volatile. It doesn't, and so well monitored from a technical perspective as well, from an algorithm, from just an average retail trader as well. Look, it might not pull all the way back into a zone, but on a pullback, you can buy this one and it can be a deep pullback. The most bearish thing that could happen to this stock is a pullback below $760 per share. That is a long, long ways to have a downtrend on this stock. And quite frankly, if Tesla makes that move, again, all of these stocks will likely make a similar type move. But don't worry, if you've missed this uptrend, I wouldn't be concerned. We're waiting for pullbacks at this point. They are likely to show up. You can't just put up this many green candles in a row. You can just pull up charts of any stock. Whenever you see that many green candles in a row, big old red candles and big declines almost always follow that type of price action. So just be a little patient. It's okay. This thing will pull back. I think you'll have some opportunities if you want to step in at that point. You could also take profits if you want to as well. If you're more on the conservative side, these big rallies are excellent times to take profits as well. Maybe not in your full allocation. If you got 10 shares, 100 shares of Tesla, nothing says you have to sell them all, but you could easily sell 1, 2, 10%, whatever you feel like doing in your own risk level, your own tolerances. And I tell you what, hopefully you guys enjoyed today's show. Remember, I have a free newsletter that goes out early every week, including what stocks I've been buying and selling over the past week. That is, link to that is in the description below. It is 100% free and always will be. Thanks for tuning in today. Enjoy your weekend. We'll be back again soon with more. Good luck with your investments.